Hello, everyone. This is Peter, and thank you so much for listening. Today, I'm going to be talking to you all about Bitcoin and the drop that I foresee coming based on just being in the market since pretty much the inception of Bitcoin. And I'm going to talk about the inflation rates. I'm going to be talking about the psychology, the Wall Street psychology, which is, I'll pull that up here, the fear and greed aspect of where we're in the market. I'm also going to be looking at Google Trends data on Bitcoin searches on Google and how that relates to the potential dip that we're imminently exploring, and then the money supply, the consumer price index, and things of that nature. So let's get right into it. So pretty much Bitcoin has taken a huge come up. Let's look at the hour mark, let's look at the year. And so if we look at the year, it's skyrocketed to its highs of $42,000. If you can see that, let me just zoom in a little more. And so pretty much it's been a crazy ride this year, exceptional. And if we look back at all the way in 2017, which is around here, this area that I'm pointing at, if you can see, it started coming up strangely similar to how it's come up this year. And I don't use any technical analysis. I have to say also because, hello? Okay. It's the attorney. Okay, I'll tell him that. Okay. All right. So my attorney told me to tell you that I'm not a financial advisor and you should not be listening to anything I'm saying. I'm not an accountant or a lawyer. So please do not take this as advice. It's not advice, and you will lose money if you listen to me. So I'm purely talking about this for informative purposes and my opinion on Bitcoin, and I hope it helps you make better financial decisions, but it's not advice, so please don't take it as such. Nonetheless, what I've noticed going back to this is that since 2017, this run-up that we're seeing now in 2021, 2020 is identical to what we experienced, the run-up, and it looks like it's going to take a dip. Just if we look at purely, history doesn't repeat itself, but it surely rhymes. And we're in a point of pure euphoria. If you look at the Wall Street psychology cheat sheet, we're pretty much in this area, the euphoria stage. We were, at least, if we're looking at it from here, from this perspective, and we've taken a bit of a dip in 2021. And over here back in 2017, we were in the euphoria stage, and then we got to complacency up here, as you can see. And ultimately, we took a fat dip, and now we started coming up. And Bitcoin really rises when the dollar is losing its value and coming down. And right now, the dollar has come down, but it has a point where it's probably going to come back up due to the fact that inflation isn't such a big concern. So the reason I say inflation isn't such a huge concern now is because there aren't many people spending the money that is being printed. And so when we start seeing that inflation is not necessarily taking a turn for the worst, it can mean a pullback with Bitcoin. So let's look at the money stock. So the money stock, the M2 money stock, is basically the velocity of money, frequency. The velocity of money is the frequency at which one unit of currency, so let's say the dollar, is used to purchase domestically, produce goods and services within a given time period. And so in other words, the number of times $1 is spent to buy goods and services per one unit of time. If the velocity of money is increasing, then more transactions are occurring between individuals in an economy. And usually when more transactions are occurring between individuals in an economy, that's when you start seeing more inflation. Prices start rising and demand goes up, and because the supply is short, i.e. trade deficits and whatever. But right now, people aren't really spending that much money. The data from December also just came out. It's not represented here for quarter four, but still, it just came out, and we're looking at the year time frame. So it's kind of coming back up, which is good. But overall, if we look at it, it's taken a dip. So nonetheless, inflation isn't such a big concern. We had Jerome Powell come out saying that they're not thinking about raising rates. anytime soon, and it doesn't make sense for them to raise rates because inflation isn't such a big problem. Now, the economists and things of that nature could say, hey, the inflation rate isn't represented accurately, and we need to also account for that inaccuracy. But at the same time, numbers this low, it just doesn't really make sense for inflation to be skyrocketing so much. Perhaps toward the end of 2021, the Fed might consider raising rates, and inflation might start coming up after we get that stimmy check of $2,000 or $1,400, whatever it is. But at the end of the day, we're also seeing, we are seeing decent growth in the inflation. As you see in here, this is the Consumer Price Index. And for those of you who don't know what the Consumer Price Index, that's pretty much so is a measure of average monthly change in the price for goods and services paid by urban consumers between two time periods. It also represents the buying habits of urban consumers. This particular index includes roughly 88% of the total population, accounting for wage earners, clerical workers, technical workers, self-employed. So pretty much it's based on prices of food, clothing, and shelter, and fuel and transportation fares, service fees, etc., sales tax. And it's measured, and it's been used as a measure of inflation, of how prices are rising. So if you notice now, a gallon of milk is around $5, at least where I am in Miami, and 8 fluid ounces of Diet Coke is around $2, and that's not including tax. So prices have definitely risen for a gallon of milk. Prices have definitely risen for chips and things of that nature, stuff that people eat and enjoy, iPhones and whatever. So we're definitely seeing that. It took a bit of a dip here in April, but then we started coming back up, and prices are still steadily rising. However, people aren't spending as much, as you can see from this chart. Relative to where we were, this is from between 2002 to 2020. People have been spending a lot less. Transactions have been happening a lot less. So I wouldn't be super concerned with inflation, and that affects the price of Bitcoin, because when we start, Bitcoin is really a hedge against inflation. If you don't know what a hedge is, it's basically how to combat risk. So it's a risk-averse tactics, a way to avoid the risk of rising prices and putting your money in something that isn't going to get your money eaten away at. So inflation is basically just another way of saying your purchasing power is decreasing. Your purchasing power to buy, your $5 could have bought you a gallon of milk and perhaps a loaf of bread. But now it only gets you a gallon of milk. And maybe not even so, because you need to get some change to pay for the taxes. But let's just say for simplicity purposes that that's the case. But what Bitcoin and gold and all these other assets like stocks allow you to do is they put your money in a place where it can grow, combat, or we also say in the trading world and investment world, hedge against inflation, and ultimately protect your dollar from losing its value. It will still lose some value relative to your gains. However, if you make good enough gains, your dollar is going to grow and outpace inflation, and you're going to have more money than you would have if you just kept it under your mattress. Now, that being said, inflation was a big concern when we were printing a ton of money earlier this year in April, March, and also in January. But now it's not a huge concern because people aren't spending as much, at least transacting as much, and people are staying put. In my opinion, regard to Bitcoin is more that inflation isn't such a huge concern. I think that's going to affect the price of Bitcoin. And we've had a huge run up this year. It's absolutely absurd. 369% for the year. And we're slowly coming down from this peak of 40,000. So now looking at the 5-day mark. So from the 40,000, we've slowly come down. And I think we're just going to take another hit. And if we look at the psychology chart, we're at the euphoria stage, right? So the euphoria stage is really the place where everybody thinks that they're a genius, we're all going to be rich. And if you look at people on online talking about Bitcoin and stuff, there's a lot of this talk. There's also the complacency stage, which says we just need to cool off for the next rally. And then when it drops even more, there's the anxiety phase, which is, why am I getting margin costs? The dip is taking longer than expected. And so then we go down to the panic and disbelief. However, I do foresee that this is a possibility. I'm not saying that there couldn't be a run up to what people are saying, $60,000, $50,000, which would be terrific. But I do foresee a huge dip after that, or even before, because inflation isn't a huge concern. And, the dollar is going to be strengthening. And also, let me show you something else that brings my hypothesis into full circle. So this is 2017. This is the Google Trends data of people searching up Bitcoin. And people started searching up Bitcoin like crazy when it was running up to that $20,000 mark back in 2017. Let me pull up the chart again over the 5 years. So this is 2017 right here, when it was coming up. And then up here in December 4th is when it hit that close to that $20,000 mark right here, December 11th. So if you look over here, look at December 11th, around December 11th, this says right here, roughly up here. It's not really catching it, but yeah. So people were searching like for Bitcoin for crazy. Everybody was talking. Your grandma was talking about it. Your dog was talking about it. And then when Bitcoin dropped, just like this chart, the interest went down. And then it went down for a few years. And then now we're at this stage in 2021 where Bitcoin is still, really popular. It hasn't, peaked as much as it was back in 2017, but there is a pattern emerging. And when more people come into the game of Bitcoin, typically the people who have held Bitcoin for a long period of time and have got those juicy gains of, 369% over the past year, they're going to sell because all these new suckers are coming in the market and are willing to pay this high price, this premium, because they think Bitcoin is going to be the next big thing. And I'm not saying it isn't. I do believe in Bitcoin. I love holding Bitcoin. However, you have to be smart about how the market psychology works. And when a lot of people are paying attention to something, typically means that you should probably get out of it or you should go the other way. I'm not saying to sell. I'm not saying to buy. I think Bitcoin's great and it's very useful, especially for all of the other aspects I mentioned in the previous video. I'll link it in the description somewhere. Nonetheless, it's really just strikingly similar. History does not repeat itself, but it certainly does rhyme. And it seems like this is a rhythm. And it might have a lot more to go. I mean, we haven't even hit the peak of interest as far as Google searches. And maybe we will. Maybe it's going to go up to $60,000. But when it does, I think it's going to crash big time around that $20,000 to $15,000 range. Great time to start buying then. At least I will start buying again then. And if you disagree, then I don't owe you any kind of discussion or explanation on why Bitcoin is so useful or why it can be useful. But also, I think it's also very wise to diversify. Look at other asset classes like gold, silver. I think those have a long way to go. But it's interesting, we still have a lot of money stock. There's a lot of money coming into the market. This is M2 money stock. And if you guys don't know what this is, M2 includes a broader set of financial assets held principally by households. M2 consists of M1 plus savings deposits, which include money market deposit accounts. So people are holding on to their money. People are saving a lot more, which is a positive thing, I must say. And over the 5-year period, we've really boomed. This is since January 4th. This is the latest data from January 4th, 2021. People have been saving like crazy. So people are holding their money. This is the spending velocity of how much money is transacting. It's obviously gone down, so the charts are similar. I hope you enjoyed this video. Please don't forget to like it. It really helps this channel out with the algorithm. And don't forget to subscribe if you enjoyed what you've seen. I do enjoy talking about cryptocurrency, about investing, about private equity, venture capital. And just remember, I'm not a financial advisor, so you will lose money, but I like to think about investing. I don't look at market cap. I don't look at technical analysis. I listen to other people who are smarter than me, and I also explore it a little bit, and I like to invest psychologically, and I see the effects that, to get in on things or to invest long term based on psychology, because most of this isn't really all a numbers game. This is a lot of the time a psychological mind game, as this Wall Street cheat sheet for psychology of a market cycle. I like to look at market cycles. Some of the times they're predictable, sometimes they're not, but I've done fairly well with my investment philosophy in a sense. But hey, there are great channels out there who explore the Bitcoin and stock investing world with technical analysis. You should definitely check them out. But I'm more of a dumb money investor. I like to invest based on what other people are looking at and also what the majority of people think is going to happen, and get in on those trades. But long term, there's always great trades. Gold is a great long term. Real estate, Bitcoin I think is another great long term. But let's see how long this bull run lasts. It's really worked hard. Bitcoin's really worked hard for us. So anyway, stay safe out there. Be sure to be careful. It's likely that it's going to dip, but don't take my word for it. Do some research for yourself. and see what's going to happen. Anyway, I hope you all have a wonderful day and happy Martin Luther King Day.